What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I got some high yield, cheap dividend stocks to buy in September. These ones are very cheap. Actually, you'll be surprised at the price of these. And they're increasing their dividends and their dividend stocks that are in demand for the consumers. People need this every day, and this is why this is a great dividend stock. And don't forget, I will always do a dividend stock analysis. So if you are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm like talking a million miles per hour. Just I'm like have a ton of caffeine in me, and basically, with these stocks that I post videos on, these are dividend stocks that are in my mind, that I'm looking at, that I'm targeting. Usually I like high yield dividend stocks, 3 to 5% range, and I always love dividend increases. So if I buy a dividend stock, I want dividend increases. I think it's very attractive. Otherwise, if it's like QYLD, RYLD, or XYLD, or Devo, or those guys, I'm in there for the income, but I want dividends to increase their dividends over time. It's like I'm getting myself a raise. So let's check these stocks out right now. I always love my medical REITs because these are in demand. These are very high valued real estate investment trusts. This is Global Medical REIT. The symbol is GMRE. I'll go over the portfolio and I'll go over what these guys are about, because anytime you buy a real estate investment trust, you need to know why it's in demand. You need to know why it's a really good dividend stock. It's got a 5.23% dividend yield. The year range is 12.11 to 15.98. It's not jumping up too fast, which is attractive. It's increasing its dividends, and it's right in the line. It was in line with the S&P, but it's slowly going up. So we like those cheap dividend stocks in our dividend portfolios. This is very attractive. So let's check these guys out real quick. This is what I like about these guys. They have 157 buildings, 225 leases, 126 tenant groups, 2.0. So here's the information about these guys. They have 157 buildings, 225 leases, 126 tenant groups, 2.0 average rent escalation. So I'm going to go to the properties list. So they have Rock Surgery Center, Select Medical Hospital. So these are all just looking at these guys with their portfolio. Star Medical Center, this is Texas, Illinois, Ophthalmology, Surgical Institute of Michigan, Mercy Health Building, St. Joseph Rehabilitation, Heartland Clinic. Here's Ohio, Northern Ohio Medical Specialist. So that's my state, obviously. Tri-Health in Cincinnati, that's a big hospital. I almost looked at travel nursing down there and moving down there once I was in nurse practitioner school, which I am in nurse practitioner school right now. It's a big hospital system. And wow, I mean, these guys are well diversified. These are all companies that are in demand. Orlando Health, I know somebody that works at Orlando Health as a travel nurse. So these buildings are really in demand. I'm very, very impressed with these guys, with the way they are. So let's check out their dividend history, which makes them a very attractive dividend stock. They're seeing slowly they're increasing their dividend. This is the first time that they've increased their dividend. It's 20.5 cents, and it's sitting at 15.68. So these guys appear to be slowly increasing their dividend. The annual dividend is 82 cents, and it's only $15.68 with a dividend yield of 5.31%. That's extremely attractive as a real estate investment trust, and it's $15.68. So that's a deal. That's one definitely that's on my radar, especially if there's a compounded annual growth rate and if there's a dividend increase, because I like dividend growth investing. I like that strategy. I like increasing my dividend over time, and you're starting to see it increase its dividend. So again, this is a REIT that is in demand, a real estate investment trust in demand that people need. So let's jump to the next dividends. That next dividend stock is Unity Group Incorporated. So this is one that's sitting at $13.05 with a 4.60% dividend yield. Its previous close was $13.07. The year range was $8.70 to $13.42. What are these guys about? Are these guys in demand, and are these guys worth it? Because you're seeing a decrease in the price per share. So we got to be careful if these guys are a yield trap or if they're just nobody wants them because they're not a good stock and they're not a good company. So let's check these guys out. Some information about these guys. They're an internationally managed real estate investment trust that is engaged in the acquisition and construction of mission critical communications infrastructure, and its leading provider of fiber and other wireless solutions for the communications industry. As of June 30th, 2021, they own approximately 123,000 fiber route miles, 7.1 million fiber strand miles, and other communications real estate throughout the United States. So here they are again, 1305. How are they doing revenue wise? So here's the thing: these guys are increasing their revenue. So there is something special about these guys. These guys are in demand. When I look at communication sector stocks or real estate investment trusts, I need to know that they're generating revenue and that they're in demand. So this one is definitely on my radar. Symbol is UNIT, but let's check out its dividend history. Things are really interesting with this dividend stock. So in 2018, it took a huge nosedive, and then it slowly is increasing 5 cents, 15 cents. It's going back up, so something is attractive, but this PE ratio, we got to be very, 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 very careful with. So that's one thing I want you to keep an eye on, is this PE ratio with this one, because it could be a yield trap in the long run. It could get you. So you have to be very careful. This one, it's in demand. It is in demand. You know, its dividend is going up. PE ratio, just be very careful with that one. And the dividend yield's 4.55%. It's attractive, but again, be very cautious. Do your research on this one. This one I'm still looking at very closely to see if it's really worth it or if it's not. But this is a very popular one that people are mentioning. So keep an eye on that one. Let's jump to the next dividend stock. It's Monmouth Investment Corporation. It's sitting at 1901. Has a 3.79% yield. PE ratio of 28.77. The previous close was $18.98. So let's check what these guys are about, and are these guys really in demand? The year range was 1301 to 19.76. It was founded in 1968, so they've kind of been around. Let's check these guys out. These are one of the oldest publicly traded real estate investment trusts in the world. Our longevity is the direct result of being patient and conservative stewards of capital. The decision-making process is here guided by appreciation of all that has been built in the past and focus on continuing to deliver sustainable long-term results in many years to come. So, founded in 1968, we are one of the most specialized real estate investment trusts. Our focus is on single-tenant, net-leased industrial properties on long-term leases to investment-grade tenants. We have assembled the best-in-class industrial property portfolio with an all-star tenant roster that includes Anheuser-Busch, Beam Suntory, Cardinal Health, Coca-Cola, FedEx, GE, Home Depot, International Paper, Kellogg's, National Oil Well, Varco, Sherwin-Williams, Siemens, Ultra Cosmetics, United Technology, and others. That's pretty strong. Let's check them out. Here's just some of their properties: FedEx, Home Depot in Atlanta, and Milwaukee Tool, Ulta Beauty, Bean Suntory, FedEx, Supply Chain Services, Best Buy, Coca-Cola in Arizona. So this is a pretty strong portfolio, honestly. That's a pretty big portfolio. How are they doing with their dividend history? I'm sure revenue-wise they're doing very well. What about their dividend history? Very slowly they have increased their dividend. 15 cents, 16, 17, 18. So it's almost every year they increase a cent with their dividend. It's a 3.82% dividend yield, a PE ratio of 29.25. And of course, I will mention Arbor Realty Trust. ABR is a wild card stock. That one I absolutely love, a mortgage back rate. But I want to know what you guys think. What do you think of the one with the high PE ratio? That one I'm going to say proceed with caution, but its dividends are increasing. Its revenue is slowly increasing. I think it's starting to become an attractive dividend stock. So this is video 2 of 2. I am telling you, I am mentally exhausted from yesterday, and I'm glad to do these 2 videos with you guys. And I will post one tomorrow on high yield dividend stocks. Again, these are probably the best dividend stocks to buy right now in September. It's going to be a good video. It's actually going to be 5 dividend stocks. I'm going to give you my top 5 dividend stocks to buy that are high yield and are in demand. And these are dividend stocks people love. So let me know what you think about these 3 REITs. Let me know what you think about this video. And again, if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. Smash that like button, and you guys take care.